Hey everyone, welcome back to the Inside the Market series. Today's session, we're going to talk about the rise of RWAs, real world assets, with a focus on tokenized gold and real estate, which were the two most talked about ones currently. But before we get going on that, I just want to reflect a little bit over the last couple of weeks. We spoke prior to the holidays. We spoke about geopolitical risk and the impact on crypto. And as you could see, the Venezuelan incident constructed by the United States had a big impact, and it's really not known what it will be going forward. But this instability will change frequently. As the presidency in the United States is making overt actions to do other things. So it's an interesting time. I just think that you need to pay attention to everything that's going on and try to incorporate that into your trading. But going back to RWAs, these are really, we spoke a little about these earlier in our sessions, but they're taking the spotlight as a game changer in finance, making it easier than ever to access, trade, and store value in flexible and efficient ways. And many believe, and myself included, this could be the next trillion-dollar piece in the crypto puzzle. And there's a lot of challenges involved as we go through this migration or evolution from the traditional ways of owning these assets like gold and real estate, moving to the digital. There's a lot of challenges, but certainly they're not challenges that can't be overcome. In simple terms, RWAs are real assets brought on chain as tokens. And by holding these tokens, you hold ownership or rights to assets like gold, real estate, bonds, or stocks, and these tokens can be traded, loaned, or used as collateral right on the blockchain. In today's live stream, we'll dive into two of the most familiar assets, gold and real estate. And I want you to feel free to drop your thoughts, questions, insights into the chat. I'll answer later in the Q&A session. So the benefits of RWAs are clear, for hard assets. But how do we move from where we are today to where everybody can participate in this? And tokenization channels, traditional finance liquidity, moving into DeFi lowers ownership friction. And what does that mean? Well, if I go and buy real estate, I have to deal with a bank. I have to deal with the seller. I have to deal with the title company. I have to deal with inspectors. I have to deal with a lot of different groups of people who have, over time, have become integral in the purchase of real estate. And so when it becomes less frictionless, I bypass all that through this tokenization, and allows me to simply hold the asset and the value without all the middlemen in between, which is a huge, huge advantage when you're going through a process. So typically a real estate transaction will take you 2 to 3 months to close, from getting approval on the loan, working with the bank, the inspector comes out, looks at the house, so on, so on, so on. It goes on and on and on. Now, this is well known and everybody accepts it. This is a giant step in the right direction, where we're going to remove that old process and move into tokenization, which I think will be huge. And you can do short-term bonds, digital gold, REIT, which are real estate investment trust tokens, and real use cases. And there's a lot of risks, involved. Valuation, custody, compliance require licensed partners, and benefits are obvious: 24/7 markets, fractional ownership, on-chain transparency. And some of you may have been involved in real estate before, and maybe it's been an easy process for you, and maybe it's not so. A lot of you would know what I'm talking about with the efficiency of completing the transaction. And the idea is, we're trying to make everything more efficient. We're trying to give broader access to these markets. Right now you're limited. Most people are limited to the assets that are located in their country or their jurisdiction, just because of the process that it takes to go through to acquire real estate. It's very hard to buy real estate, let's say in the United States, when you're living in Vietnam, almost impossible because of the hoops we have to jump through to be able to get it done. This removes these, tokenization removes the need to be physically present in those locations. So basically, I can be sitting in Vietnam and I can have access to these markets around the world without physically having to go there. So now I can participate in these markets, and my barrier to entry has been removed, significant barrier to entry. And as a result, I think tokenization will, drive the value, because more people can purchase real estate, and it will distribute the benefits more equally around the world, rather than being located just in the developing countries or developed countries, like say the EU or the US. And so with that in mind, I just want to get on to some of the top questions I'm seeing, and comments on your insight, and go through. I'll try to go through these, as many as possible. And some of the insights are very obvious ones, right? How is tokenized gold different from physical gold or a gold ETF? Now, ETFs are exchange traded funds. And then, of course, you know what physical gold is, right? So, with tokenized gold, the difference is you hold a physical asset, you own a physical asset like gold, but when you tokenize it, you also have access to the 24/7 available in the market. You're able to trade. You have liquidity, and you can also do fractional ownership, right? So, if I have to hold physical gold, I have to, number one, it's bulky, right? Real gold is bulky. I have to store it. I have to insure it. I have to, make sure that it's safe, secure, and all those things disappear once I tokenize that. And even though there's some security risk on a platform, it's far less than the physical security risks that are present. Also, you cannot. It's very hard to divide gold into smaller pieces, physical gold. So with the RWAs and the tokenization of gold, you can own a very, very small piece of this asset without diminishing the value. You don't have to worry about storage. You don't have to worry about insurance. So it's really, really an efficient way to hold these physical assets and hold them in a digital form. And the differences between physical gold and tokenized gold are just that, liquidity, so on. But with the ETFs, now the gold ETFs are, you own shares in a fund that owns the gold, right? So you buy shares in, you have limited time to trade. You can only do it a centralized market, right? You have trading hours, so your liquidity is very limited, and so there's no direct ownership of that, and you can't do fractional ownership. At least you can't do it efficiently. So there's a clear advantage to commodities, to the tokenization of these of the gold. And I think that's why that's where everybody's starting. And I think that's a much easier process than, say, real estate, which we'll get into down the road. But there are risks, right? The biggest risk, I think, for tokenized gold is you have to trust the issuer, right? You have to trust the platform, and you have to really feel that that what you're buying is the real thing. I think that's the biggest risk. But if you were able to overcome that and find a platform and it's trustworthy and you can do it, then I think there's going to be widespread adoption of the RWA in gold around the world. It makes a whole lot of sense. And commodities, it can be any commodity, but we're just talking about gold today. But it's not risk-free. But I think those risks will be diminished or mitigated as we move forward. So I think the opportunity is huge. I think it's inevitable that this will move forward, and there's going to be some bumps along the way. But I think in the end, I think you'll see widespread adoption of this. So the gold is pretty straightforward. The idea of tokenized real estate creates a different set of problems, and that is, real estate tokenization is a little bit more complex, and really in real estate tokenization, what are we talking about? What is typically tokenized? And it's really the tokenization of the benefits of the value. And in real estate, you have intrinsic value, the value of the asset itself, the physical asset going up in value, and you also have income stream. If you're renting the property, you own the property and you're renting out, that has value. So the two things that are typically being tokenized are those two values, intrinsic value and cash flow value, into one value, and over time that value should increase, as most real estate does over time. And the biggest thing about this is that on real estate, the problem is, number one, we talked about it a little bit earlier, is how do I buy an asset outside of my local area? And there's all kinds of opportunities around the world. So right now, in real estate, I'm limited to buying what I can see, what I can go and physically touch. And as we said, the process is rather tedious. You have to go through, but clearly defined. You can do it. And so now with this, I can look at real estate, U.S., Europe, South America, wherever I think there's opportunity. And as you know, in real estate, different markets move at different speeds. The real estate market in China was on fire, 10 years ago, 5 years ago, and now it's been struggling. But it doesn't mean that real estate around the world is struggling. It just means in that particular area that real estate boomed, and then it's sort of, some of it fell and busted and has been sort of stagnant. But there are other areas in the world that are starting to boom, growing areas for multiple reasons. And so I'm able to participate in that. Number two, I'm limited by what my financial capability is, and my finances, what I'm able to buy and own 100% is very different than if I took, let's just say, $100 as an example. It's not $100, but let's just say, and I was able to divide that into $1. and so I can buy, instead of buying one property, I participate in 100 different properties. And this is the huge advantage to fractional ownership. I can, the price barrier, which was prohibited me from participating in a lot of the high-end assets, now it's been removed or will be removed through these RWAs. And this is true fractional ownership. So I can make my limited funds work harder for me. So I have diversification. I can buy in different markets. And then I have the ability to not only buy in my market, but I can buy in any market in the world, wherever I think the market's going to do well. And the challenge of this, there are a lot of challenges on the real estate side, and but you get a lot of things that are tokenized, like the areas of right now, there's all kinds of different properties being tokenized. You have commercial real estate, you have residential properties, you have luxury assets, real estate funds, so on and so on. But each of those components, you have a number of components involved with real estate. Unlike gold's very straightforward. You have the asset in real estate, you have the legal framework, you have smart contracts, which smart contracts are the contracts which allow you to automate a lot of the things that happen, with real estate. So dividend distribution, and so on and so on. And then you have the blockchain platform. So you have the underlying technology for recording ownership. So you have all these pieces involved in the process. Now, in my mind, the simpler things are, the fewer things that can go wrong, right? So anytime you have a lot of moving parts, look at a car versus a helicopter. Okay, a helicopter is a very complex machine. It works and it's very valuable, but there's a lot of pieces that go into making a helicopter viable to fly. So right now, I think we have a lot of pieces, much like a helicopter, in real estate that need to be worked out. And the idea is that these are not impossible, right? To manage, but every jurisdiction of real estate ownership, foreign ownership, how do you prove title, right? How do I, when I buy a token, how do I know for sure that what I'm buying is really representative of the underlying asset? Currently in real estate, there's a title company, and the title company, they provide title insurance, and they say, we guarantee that what you're buying is a real asset, and number two, the owner that's selling it to you is the real owner. It's it's a very clear line of title. So very easy, very straightforward. But again, it's limited to your local, being there, physically present, dealing with the title insurance company, dealing with the owner directly. Once you go to digital assets, and once that happens, then we have to have the question of, okay, I'm buying this asset. I'm buying it on a platform. I own it. I own a fraction of it. I can't go and physically visit it. It's there. I am assuming that the title is correct, that the seller who sold it to me is the real owner. And so as this evolves, I'm sure there will be a process that will can verify ownership. Maybe it's you work with the title company in a digital, so the insurance or the title companies can then say, okay, we're going to digitize our process, right? And so that I'm guessing, but that will take some time. And so eventually, I think what will happen is you'll have these pieces in place, and instead of taking months, it's going to take 30 seconds, to trade and get to ownership. which is huge. You think about the value of being able to transact at any 24/7. I feel I need the opportunity now. I can do it now. I think, and press a button and boom, I'm in the real estate market, and off I go. So, and I think, the biggest challenges to the widespread adoption of RWAs in the real estate space are more numerous than in the commodity space, and mostly for the reasons that I just spoke about. But when there's an issue like that, a lot of smart people start thinking about, how do we streamline this process? And, we have the asset and we have the token, and so everything in between, how do we make sure that it duplicates or gives people the security that what they're owning is the real thing, and we'll figure that out through the smart contracts, and through, I think, ensuring the right, correct ownership, that who you're buying it from actually owns the property. And so I think we're in the early stages of that, and I think that will take longer to get to, but I think it will definitely happen. I think it's inevitable, as we move through this process, to make everything more efficient. And I'm really excited about it, because that means the world is my oyster, and I can I just have to sit and do my own reading and research, and try to figure out what markets I want to be in, what class of assets, real estate asset I want to be in, and then I can do fractional ownership of many assets around the world. All of a sudden, my portfolio looks like I have a lot of money, but all I'm doing is diversifying into areas that are that I couldn't do before. There's no way I could do it, and now I will be able to. And I think this is, if you have, let's say in the world you have, and this is a very simplified version, but let's just say, for example, you have 1 million people doing transactions, right? And you have many more obviously doing that around the world in real estate. But now I have, there's 7.4 billion people or 7 billion people in the world. And now any of those people can play in any market once they iron out all the jurisdictional problems. I'll be able to participate. And so you have more liquidity, you have fairer pricing, you have access before where I couldn't. So, and one of the questions that came up here, and this is a very interesting thing, are what are the advantages of RWAs for investors in countries with high inflation? And the obvious thing is that typically in inflation, hard assets, physical assets, are a hedge against rising prices. So as prices go up and my purchasing power diminishes, as the prices of goods and services go up, I'm using the local currency to buy. So my local currency buys fewer and fewer goods. And if inflation is really rampant, then that can severely impact me. So typically, if you're a big investor, you would hedge your portfolio, whatever your investments are in. In an inflationary environment, you would hedge it with physical assets, because the physical assets, like commodities and real estate, gold, tend to go up in value in step at the rate of inflation. And so your purchasing power may diminish, but part of your portfolio is moving up in value, so it balances out. So this is a very common way to hedge the markets, right? To hedge inflationary markets. And but again, it's limited to people who can buy those physical assets, right? I can buy gold, I can buy real estate, and then I can hedge it, and that requires a lot of money and local access. So So now with the RWAs coming on board, if I lived in, for example, Venezuela, which is very high inflation there, and I can invest in physical assets. But not only can I invest in physical assets, I can invest in physical assets anywhere in the world. So what I do is I look to invest into physical assets, real estate, in countries with a stable currency. So my currency, my local currency, say for example in Venezuela, is not very stable, and I'm forced to participate because this is the only exposure I have. But if I'm able to invest in in a physical asset in a stable currency, so I get two advantages there. One, I'm investing into an asset that is dollar based instead of I don't know what they use in Venezuela. I guess the peso or something like that. And not only that, I'm have a physical asset. So that makes huge amount of sense, especially for living in these countries that are have to deal with really high inflation. Before I would have to spend the money very quickly because tomorrow the value of my money would be much less, and I'm caught in this vicious cycle and not a very pleasant cycle. And so I get global access and I get diversification. But on top of that, I can also do fractional ownership. So two barriers have been removed: my access to global markets, to stable economies, and the ability to buy art, buy real estate, buy all these markets with fractional ownership. And so again, these are major barriers to most people around the world. And this is going to be the big leap in tokenization. This will be, huge. You think about how many people will be impacted by this. Everybody in the world will be impacted by this. Any investors who are looking to invest. So, the fractional ownership, I think, is really a key piece of this, and the enhanced liquidity. So, typically when I have a physical asset, it's very hard for me, not hard to sell, but there's several things, right? I go to sell the asset, depends on, I have to market it. I have to, maybe find a real estate agent. I have to, go through the process, price it, have buyers come in. Again, it takes 2 to 3 months to purchase these assets today without the tokenization. And then when I sell that ownership, depending on the market, it could take from a couple months to a couple years, depending on how much demand in the market. So if I need liquidity and I need to have access to my funds because I've made a gain and I want to get out, it's very difficult for me to time that. So typically the hard assets are not they're illiquid. They're not very liquid. And so that's one of the disadvantages of cash or of real estate and currently is that great appreciation. Sometimes it's income with the rent. But the liquidity part, if I need to raise money quickly for whatever reason, I have a medical emergency or I need some money for my children's education, I can then sell, try to sell that, but I can't count on that money coming in. I have the value on my paper value, but it's very hard to transform that sometimes into money in my hand. With the tokenization, I can trade around the clock. I can sell my fractional ownership. There'll be activity in there. There'll be buyers, and you're only limited. Okay, so right now, it's a secondary market, right? So right now, if there are not a lot of, there's also a risk that I can't sell my tokens, or I can't trade my tokens at a price that I want. So again, as more people come on board and start to trade these, and you have widespread adoption, then that liquidity will increase, and the pricing will be much like a stock, right? So, instead of 2 participants, you're going to have 10 million participants trading around that particular asset, and as that increases, it gets closer to fair market value. There's no risk premium put on top of the value because I don't have many buyers. So if there's liquidity, then the pricing will be fair. That's in any market, not just in tokenization. So I think the whole idea of tokenization is here, is the beginning. It's going to move forward. We're going to really, I think it will be an area that will continue to grow for the foreseeable future. It won't be a smooth ride, but it will be a ride that I think eventually there'll be mass market adoption of this, and I'm excited about it, and I can't wait to participate. Now I have, I can buy anything around the world, and I just staying at home. I don't need to go visit it. And once we get to that level, I think you're going to see the number of transactions, real estate transactions, will accelerate. So that means liquidity will go. So buyers benefit, sellers benefit, investors benefit. Everybody benefits from this. I see very little downside once we get over this initial challenge. And I know we don't have much time here, but I think this is an area that we'll have to talk about again. I think it's an area that requires numerous discussions and research, and as the technology advances and as more people start to use this, I think you'll see huge leaps in value and adoption. So I'm excited about it. I hope you are, and I hope understanding the impact of what RWAs are going to do will help you see opportunities before the crowd. And there's a lot of enlightened people out there. There's a lot of people paying attention, and so I think this is a good thing. And it doesn't matter where you're located in the world. Everybody's looking at the same thing, and that group of enlightened people for tokenization will grow dramatically. So if you pick the right area, and you happen to be a very good analyst, and you're able to pick areas that grow, I think you could do really well. So I hope this helps, and I think in the future we're going to touch on this again, because I think it's inevitable that this will become part of the mainstream. And as always, I want to say, stay smart with your investments, and have a great day, and see you soon in the next AMA. I think you are on the right track, and wish you well, and I'll see you the next time. Thank you.